Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast, available every morning on Apple, Spotify, or wherever you listen. It's Monday, the 9th of September in London. I'm Caroline Hepker.
And I'm Stephen Carroll. Coming up today, stocks drop as traders turn their attention to worries over jobs and economic growth.
The UK Prime Minister doubles down on cutting the winter fuel allowance as pressure increases on government spending.
Plus an £8 billion warning to UK boardrooms why Asda's equal pay fight with its workers could have far-reaching implications.
Let's start with a roundup of our top stories.
Worse than expected economic data is fueling concerns of a broader global economic slowdown as concern shifts from inflation to growth. Friday's weaker than expected US jobs data has added to the view that the country's labour market is cooling and sent stocks reeling. Federal Reserve Governor Christopher Waller says the central bank now needs to ensure its strategy. But speaking to Bloomberg's David Gura at the Texas Tribune Festival, Treasury Secretary Janet Yellen says she's not yet worried.
Overall, I would say for the US, the kinds of metrics that we would monitor that would summarize risks, whether it's asset valuations or the degree of leverage, things look good. I don't see red lights flashing.
Janet Yellen speaking there a day after US equities capped the biggest weekly sell-off since the March 2023 regional banking crisis.
Traders will be keeping a close eye on US inflation data to come this week as worries mount that the Fed has waited too long to cut rates. It's a sentiment now being acknowledged by policymakers, including the Fed Governor Christopher Waller.
I believe that the balance of risk has shifted toward the employment side of our dual mandate, and that monetary policy needs to adjust accordingly. The current batch of data no longer requires patience. It requires action.
Waller says he is open-minded about the potential for a bigger rate cut and would advocate for one if appropriate. The focus on the US rate policy and growth comes as Japan's economy expanded at a slightly lower than expected 2.9% in the second quarter, adding to concerns over a broader slowdown in key economies.
US presidential hopeful Donald Trump is promising a 100% tariff for countries that shun the US dollar. The Republican nominee pledged to make it too costly for countries to shift away from using the currency during a speech at a campaign event in Wisconsin. Trump told crowds at the event that the US dollar has been under, quote, major siege for 8 years. While dollar dominance has lessened in recent decades, the US currency still accounts for 59% of official foreign exchange reserves in the first quarter of 2024, according to the International Monetary Fund.
China's deflation risk is rising, marking the latest threat to its growth prospects. The country's consumer price index rose by 0.6% from a year earlier, according to the National Bureau of Statistics. That's compared to a 0.7% forecast. Goldman Sachs' chief China economist Hui Shan says things might be even worse than the data illustrates.
I would argue the CPI print maybe is even weaker than the numbers are showing, because the month of August we got a boost from food prices. The inclement weather conditions, the higher vegetable prices, that boosted the CPI. But despite the boost from food prices, we're getting 0.6%.
Goldman Sachs' Hui Shan speaking there. Weak consumption and investment demand have led to intense price wars in China and have dented China's chances of hitting its growth goal of about 5%.
Here in the UK, pensioners are likely to see a £500 bump in their benefits next year. It's a boost that the government hopes will diffuse a row over the cut to their winter fuel subsidies. Bloomberg's James Wilcock has more.
The government are pointing out that pensions are tied to the triple lock, meaning they could go up 4% when wage data is finalised. That money would more than make up for the £300 lump sum the elderly are set to lose. But that hasn't prevented the anger at the cuts, with Prime Minister Keir Starmer having to defend the move over the weekend.
I'm determined that we will take the tough decisions, because the change, which is improved living standards, people feeling better off, better public services, dealing with crime and immigration and issues like that, that change will only happen if we fix the foundations now. And that's why I'm determined to do it, tough though I know it is.
Starmer's party will almost certainly win a vote on the policy later today, given their massive majority, but the UK press report many backbenchers plan to rebel. It's a sign of more trouble ahead. With a stretched budget and multiple government departments saying they're in crisis, Chancellor Rachel Reeves will have to make more tough decisions that could risk party unity. In London, James Woolcock, Bloomberg Radio.
The US Secretary of State Antony Blinken will arrive in the UK later today to begin a 2-day visit. A series of meetings will be held with senior officials, which Washington describes as reaffirming the special relationship between the two countries. It's understood that Blinken will discuss issues including Ukraine and the Middle East with the Foreign Secretary David Lammy, and may also meet with the Prime Minister Keir Starmer.
One of Europe's largest banks is ordering its UK employees to spend more time in the office. The policy will come into force from next year. Bloomberg's Tiwa Adebayo has the story.
The hybrid way of working, which became popular during the pandemic, is being steadily rolled back by UK employers. Santander is the latest firm to place emphasis on its in-person activity as it announces a new policy requiring UK staff to be on site for 12 days a month. The Spanish-owned bank is clamping down on remote working, mandating its employees to come to the office one more day per week, according to a company spokesperson. The announcement comes just a week after Big Four accounting firm PricewaterhouseCoopers upped its own in-office directive to 3 days a week too. In London, Tiwa Adebayo, Bloomberg Radio.
In a moment, we'll bring you up to date on the narrative on markets after Friday's jobs report from the US, the economic data we've had from China and Japan, and look ahead to the CPI print in the US later this week. Plus, we'll be telling you more about a hearing which could help determine £8 billion of equal pay claims in the UK. But another story that caught our eye this morning, for those of us still dreaming about the summer as things turned dramatically colder over the weekend, I found how Americans are replacing Brits as the top buyer of holiday homes in the Algarve.
Yeah, surprising, isn't it? We've reported a number of times actually about just how popular Portugal is. And Sarah Rappaport, Bloomberg's Pursuits correspondent, has been writing about this today.
Yeah, so this is a trend that's reflected too in the tourist numbers. Over 1 million Americans visited Portugal in the first half of 2024. That's double the 2022 figures. And the Portuguese Property Association says that around 10% of foreign home buyers are now from the US. Unsurprisingly, the stronger dollar playing a factor there as well, but also the country's digital nomad rules, which allow you to live in Portugal if you earn over about €3,300 a month. It's also comparably cheaper to buy there than it is places like the French Riviera or the Greek islands, and the time difference helps too because it's closer to the East Coast.
Yeah, absolutely, but there's a real push and pull between the desire for places like Portugal to attract investment or investors or new people, especially from the US, and also the concerns around over-tourism. And Portugal has seen protests over the summer, just like a number of other countries in Europe. Yeah,
interesting story to read this morning on Bloomberg.com and on the terminal. Let's turn to the markets now, though. Shares in Asia sliding today as investors continue to digest Friday's US jobs report, which saw fewer jobs created than expected. Add to that the data from Japan showing weaker growth than economists had forecast, and China's core inflation cooling to the weakest in more than 3 years. Our Markets Live strategist Mary Nicola joins us now for more. Mary, great to have you on. How are you reading the sentiment and what we're seeing on Asian markets today?
Yeah, this morning I think sentiment is pretty jittery, and the U.S. job market is weakening, but arguably not enough to give the confidence of a jumbo rate cut for the markets, and we've seen that in the pricing from the OIS market. But of course, adding to that, just like you touched upon earlier, was the deflation risks in China. They're rising, and the weakness in consumption is becoming more entrenched. And then you've got the two global pillars of growth facing challenges. So it's almost inevitable that a lot of these markets are going to struggle this morning. Also, on Friday, you had Fed speakers, Williams and Waller, and they failed to give the green light for a jumbo rate cut at the September meeting. So now that the Fed is in the blackout period, the market's still debating, is it 25 or 50? But I think the bias is shifting now towards 25.
Interesting. We have US CPI numbers due on Wednesday. How important do they now become to the Fed's calculations?
Yeah, it's interesting. Now that CPI, the jobs market is out of the way, now CPI is now back in focus, and it's going to come under scrutiny because we didn't get that clear signal from the labor market on whether it's 25 or 50. So, and of course, we know that at Jackson Hole, Powell put a lot of the emphasis on what's happening in the labor market. So, but the thing is, I think one of the key things from the Friday report was that average hourly earnings were up in August. And I think that could suggest that inflation battle is maybe is not done yet. So I think any upside surprise on inflation will just worsen sentiment, as it'll almost guarantee just a more cautious approach from the Fed.
Of course, Mary, it's not just the US that we're focused on as well. Stories of weakening growth coming out of China and out of Japan today too. And we do have another central bank decision coming up from the BOJ the day after the Fed, in fact.
Yeah, I think the Japan numbers were actually, despite the downward revision, I think Japan's GDP was still solid. So private consumption is positive for this first time since Q1 of 2023. You had business spending. It's also higher after a negative number in Q1. The GDP deflator, an indication that there's homegrown inflation, saw its 7th consecutive number in positive territory. So it shows that that's fully entrenched. And these are all positive signs for the BOJ to take away with. So even with the downward revision to GDP, growth is above its potential, which the BOJ estimates to be about 0.6%. And the BOJ looks on track to hike. It may not be in September, right after the Fed, but it could be later this year, especially because the Fed's rate cut is likely to ensue some volatility in the markets.
OK, something we'll continue to follow. Mary, thank you so much for your time this morning. That is Bloomberg's Markets Live strategist, Mary Nicola.
The British supermarket chain Asda faces a crucial stage in its equal pay fight with workers today in what could form the start of £8 billion of claims against the biggest retailers in the UK. The case over the discrepancy in pay for retail and warehouse staff is being heard at Manchester's Employment Tribunal today. Our reporter Jack Ryan is with us for more details this morning. Jack, good morning. What is the background to this case?
So basically the background to this is that it goes back about a decade. These workers, these claimants with Asda, they went to the Employment Tribunal in 2014, represented by this prominent law firm, Lee Day, which often represents these kind of cases. And basically the case of the claimants is that the distribution workers at Asda, the warehouse workers, who were disproportionately men, were earning about £1.50 to £3 more an hour than the mostly female shop floor retail staff. And so then this case is being taken under the 2010 Equality Act, but it's being taken basically under provisions that are in decades of British equal pay legislation to seek to basically rectify this pay discrepancy and receive back pay for the 6 years of pay to make up for essentially the difference between the two wages.
Yeah, and the two groups of claimants seem to be arguing that, you know, that the value of the work is roughly the same. Basically, there's lots of procedures around how they figure that out. Who do you think would end up paying the bill, though, if the claims are successful? And you're looking a little scared. Have I summarised that correctly about the two groups of claimants?
Yes, I think you're right. So there's 5 different supermarkets that are all facing similar claims here. So Asda is the one that's the furthest along. And the liability in that case could be huge. The lawyers say it could be as big as $1.2 billion in the case of Asda. But Tesco also face a similar claim, as do Sainsbury's, Morrison's and Co-op. As I said, the Asda one is the furthest along. Who would actually face the liability, we're not exactly sure now, because Walmart, in their annual accounts, they say that they have indemnified Asda's current owners, the Issa brothers and TDR, against a portion of the liability in this case, but we don't know how big that portion is, and so how big of a liability that Walmart potentially faces. But the hearing that begins today in Manchester is really the key point in this process, because today is the point at which, or I should say over the next couple of weeks, is the point at which the decision is going to be made on whether or not the work that was done by the shop floor workers and the distribution workers was of equal value. And that really is the key decision for the Employment Tribunal to make in this case.
So, Jack, as you say, the hearing starts today. When should we be expecting a decision in the Asda case?
So for this stage of the hearing, it should be some point in the first half of next year when the court will decide whether or not these two jobs were of equal value. And then there'll be the next point, which will be Asda will attempt what's called its material factor defences, including they will argue perhaps that the market rate for the two jobs is different. But what was very interesting last month is that a similar case, the first of its kind in the private sector, was won by retail staff and Next against their employer because of a pay difference between warehouse staff and retail staff. And in that instance, the market forces argument was not considered sufficient as a reason to pay more towards the distribution workers rather than the retail staff.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.